Hi traders, this is Brad Gould with FX Market Insight for Tuesday the 29th of January. All right, now coming into Tuesday's trading, this is where things start to settle down now. You can see all the major currency pairs here where Friday's moves, the US government coming back online, all the Brexit talk and everything else has all been factored into the market now, and the major currency pairs have really settled down. Now, I think these moves on the US dollar will be a little bit short term. Now, we are still waiting for a lot of these US fundamentals to be released, and I don't think there's any schedule at this point. But I don't think this move is long term. But just having a look at the pairs here now, your technicals are generally blown out. Now, Aussie was looking for all money heading south fundamentally with the change in rates in the local banks and the rumours that the RBA may have to cut rates. Everyone's been absolutely blown out there, and it's had enough steam to blow above stops just above 72 the figure. Kiwi enjoyed the rally as well. It's got up to 68, sort of 70. Dollar yen is just starting to drift lower. Looks like the bit of the safe haven trade. I don't know if it's coming into play, but US dollar is a little bit weaker there. Now euro starting to look a little bit more comfortable. If anything, this move in the euro has really butchered traders or battered them. You get into this trade, the euro looks set for a move down to 111. Now it's sitting back here, and with that geopolitical backdrop, traders are actually sort of waiting now and go, you know what, I'm not just going to run in just yet. The next resistance line's up about 115. So if you're looking to get in at the moment, you're in no man's land. So it's worth just waiting, right? Usually, and I had a loss on Friday. Usually if you've had a loss, you want to see a bit more clarity, right? We need clarity around the US dollar. We're not getting that, but this whole move is stalled now, which suggests to me that, it's been factored into the market. Sterling, it's still sort of rallying, but it is starting to stall. And I'll show you the news in a minute. They are sort of starting to say, Sterling may come off a few hundred points because now positive Brexit's already factored in. Don't forget, that's just the media. That's an opinion, right? So anyway, it's in no man's land, sitting very comfortable around 130, 160. Dollar CAD whipping around all over the place. And it does seem to be starting to react a lot closer to oil. Okay, oil dropped from $54 back to into the 51s, and that was enough to get dollar CAD back to the top side. So mixed fundamentals for dollar CAD, but it is starting to make a bit more sense. Now, just whipping across to the sort of general news out there. Actually, let me just show you the US dollar first, the US dollar index. Now, the index itself is, had that big dive on Friday. It's now sort of consolidated, just trading sideways. So on the short-term picture, right, this is the hourly chart. It looks like like US dollar's falling. Well, it's actually not. If you look at the bigger picture, the US dollar itself, and let me just switch over here and give you a look at that. The dollar index, if I switch over to the dailies, for example, you'll see, it's a short-term blip, but overall in the big scheme of things, this thing is just cruising to the sideways. And when I say sideways, it basically can go up or down. It's no real specific direction. I mean, this trend line here, it's only had a couple of touches, but the real pattern here is you've got a high here above, up around 97, sort of 60, and a bit of a low down here towards 95 or 94.80, 95 the figure. So don't get caught up in the short-term price action and start to get fixated on where some of these instruments are, because it's quite deceptive. If you're looking at the shorter time frames, you are going to get confused with where this thing's going. Now, the offshore one, the US-China trade talks are back in the headlines. We've got Trump's coming up, in a week or so to give his State of the Union address. I'm sure he'll want to have some punch in that, but there's, the talks are continuing. To me, if I see dollar China falling, to me, that sounds like a good deal for China, but it is all over the place. So it's a very hard one to sort of work out exactly what's going on there as well. Once again, it's all about clarity. Now, just looking at the equity market, sorry, I was just going to say there's a few big companies which took hits. I think it was NVIDIA, Caterpillar. They're putting out earnings warnings, all this sort of stuff. So US equities back on the downside just a touch, and that also sees the dollar sort of rallying somewhat. You'd expect the Asian equities and European equities to follow. Once again, go back to next week. We don't have any US fundamentals. The market is looking at the risk on, risk off appetite that's coming from the equity markets. All right, so it's a little bit of a nuisance. And you come back to the major data releases today. We have Kiwi trade balance. It's no big deal. Don't get over excited about that. Look at the NAV business conditions. This is like a really low tier number, but I have seen it come into play in the past. Now, interest rates are going up by the local banks, not from the RBA. It'd be very interesting to see if these business conditions or confidence numbers do have a major swing, because as I said, I have seen this probably once in the last 12 months move the currency substantially. So don't discount a potential move there. And when you come down to the, obviously there's no US numbers coming out where you wouldn't think so. Consumer confidence numbers, are they coming out? Well, I don't think so, but we'll have to wait and see. Then we've got, and that's it for today as far as the data goes. So when you come back, have a look at the news and try and work out what's what. You try to isolate specifics, okay? As I said, usually say in this section, like look for the currencies going up or down, etc., etc. Now, dollar flat before Fed meeting, US-China trade talks. Okay, that's more of just an opinion of what's going around the market. Here's a little bit of a clip on sterling. Another opinion saying that the best case Brexit scenario is already factored in. I don't think that's the case. I think we could see sterling up to above 135 if we get a good deal. This is another classic you get from some of the media outlets. Canadian dollar reverses from 2-week high on global growth worries. Like, where the hell are they? That is absolute rubbish. What they're talking about is equities are weak, so there's global growth problems all of a sudden. It's drama, right? That's not what's happening at the moment. So just be aware that that's the sort of crap you've got to sort of decipher. All right, now let's just come back and give you a rundown of the MyFX Trading Hub, what is coming out today. If I just change the screens here. All right, now just having a look across the board here. Now, geopolitics are dominating, but the market is back to some sort of normality. We still don't have the clarity on the US dollar, and that's because the fundamentals aren't here. Now, the Fed meeting, on Wednesday is going to be very important, but the Fed looks at the economic numbers to determine policy. Now, they don't have the numbers. We don't have the numbers. So what can you do about that? Well, not much. If anything, you can err on the side of caution. That may be the case. So it's going to be interesting what the press conference really says. And they may actually come out and say, our president's a fair income goose. And that's a major problem. We don't know what's going on. So with the major currencies, don't get caught up, as I said, in the short-term price action. To me, the US dollar pairs are directionless at this point. Sterling, well, technically, it's still going up. And the UK fundamentals behind the scenes, the Bank of England have to manage, are very, very strong. But they can't really do anything about it until they know what's going on with Brexit, because that may have other financial repercussions. So the Bank of England has got its hands tied. The UK economy is boiling and the currency's rallying. So it's a tricky one, but just keep an eye on that. And as I said, if you're thinking of getting long sterling, by all means, I'd get long back towards support. But a negative Brexit story here could throw this thing down a couple of hundred points very quickly. The rest of the pairs, Euro, Aussie and Kiwi, as I said, traders are licking their wounds from Friday's moves, and they are still waiting for clarity on the dollar and some of these pairs. So just hold tight. To me, there's no real good trading opportunities right at the moment. Sterling, you could say that you could argue getting long, but I tell you what, after the last 12 months, I've been bashed up that many times. You can sort of, this is where it gets easy for analysts, right? I can call it going up because I can see what's happening, but to actually trade it is extremely difficult. You have to have massive stop losses. If you get into the trade, sure, you can ride it, but your position size is probably so small because your stop is so big that it's not really worth it anyway. All right, so just hold tight at this stage. There's no major fluctuations or anything to really get your teeth into. And that's where we are for today, guys. There's no major data. There's a huge amount of really big stuff coming out later in the week. Don't get confused. The January 29th here for the Aussie CPI, there's a glitch on the calendar around the time that the Aussie numbers come out. So if I put it on the day that it should be, it comes in after the Fed. This is just one way for me to get it up so you can see where it is. But it is actually on January the 30th. This will, anyway, we're trying to get it fixed up. It's actually doing my head in. And don't forget, for those traders who have missed the last couple of bits, you'll notice these different colors here on the data releases. What we've done is, for the traders in the program, we are giving you greater opportunity to actually trade and take advantage of some of these releases. You'll see the legend for the colors down the bottom here. Okay, let me just go down there. And this is the, so I don't want to restrict traders taking advantage of the opportunity. So central bank releases and employment numbers, definitely extremely high impacting. Okay, so you're going to be flat and wait 30 seconds after the release. The rest of them, we want you to take advantage of them if you can. Okay, so the yellow ones, like the Aussie CPI tomorrow, you have to just be flat before it, but you can trade as soon as the release comes out. And the ones in blue, we're basically trying to show you that there's a potential opportunity, a market moving data release coming up, but you can actually, no trading rules apply. So you can hold positions into it, you can trade after it, you can do whatever you like. So what we're trying to do is give you greater flexibility in managing the overall economic calendar. All right, hopefully that helps. Now, if you have any feedback on anything, then on the site or anything from these FX market insights, by all means, jump on the 247 trade zone and you can give us an update there, what you think, any improvements that we can make, and we'll look into that as well. Don't forget, this Friday will be the last week for Flock. We will be moving to the new 247 trade zone, so you'll be able to find out what you've got. So log in there, get yourself registered, and you'll get updates as new things come up. All right, guys, that's it from me. Have a good trade day, and I'll see you in the 247 trade zone. Cheerio.